evening, everybody. Welcome to Wednesday Night Stocks, where we're going to talk about a lot of things going on in the market. What's going on, Tanner?
Not much, man. I'm watching stocks put up good earnings and then melt away once the market opens.
We're
Fun.
going to get into it in just one moment. Please read the disclaimer, everybody. We are not your financial advisor. Please do your own due diligence. Take everything we say with a grain of salt. We're just two guys that do a lot of research, and this is for educational and entertainment purposes only. All right, with that being said, thank you everybody for being here. I really appreciate it. So Tanner, blood in the water, a lot of blood in the water, a lot of companies. Where do you want to start?
Oh, where to start? Maybe just the broader SaaS conversation. I mean, today was Shopify. That was the one that got took behind the barn and shot even after great earnings. Today is obviously it's down a ton, 6.7%, which is actually not too bad of a close versus where it ended up. At the bottom was at 109 on the day, which was actually down 13.5%. That alone in itself would be a bad day. The craziest part about that, however, is that in pre-markets, the stock was up over 13%. So it had swung after earnings from up 13% to down 13.5%, essentially a 26% swing on better than expected earnings, EPS, and raising guidance. A triple beat, literally, like unbelievable. Wall Street was so off on their numbers, and then they guided for 30 plus continuous growth into Q1 of 2026. Stock sells off. I'm a little bit blown away, but maybe that's just because they're easily replaced because they're a software name.
Oh, shots fired by Tanner. Easily replaced. I mean, isn't Shopify the backbone of e-commerce?
Of decentralized e-commerce, definitely. They're the number one player.
I'm not talking about Amazon, obviously not Amazon, but for mom and pop shops, for a lot of businesses,
their
websites are ran on Shopify in addition to them selling on Amazon.
Correct. Yeah. In addition, is a great way to put it. For a lot of businesses as well, they want to have full control over what is shown and how it's shown and how the promotions are shown. Amazon might not give them that exact flexibility nor the take rate. So, Shopify is actually a great way for them to offer their exact offering to their customers. The only problem is they don't get that organic reach that Amazon can bring just by people going to Amazon.com, maybe without a purpose of purchasing a specific product, but then somehow they find their way to a, specific Nike product or something like this. Nike's actually a terrible example because they, had a whole thing with Amazon, but yeah. So I think the interesting thing is, if anyone listened to the call, every single question except for one, I mean, literally like 9 out of 10 of the questions that were asked by analysts was about agentic commerce. And what that essentially means is if you were to go to Gemini, AI mode for Google, ChatGPT, Microsoft Copilot, and you're saying, hey, it's a little cold outside. Like, how can I stay warm? And they might go, hey, you can wear gloves. If you don't have gloves, buy them here. Like there's ways that they can turn that into a purchase naturally. That even if it's not on a Shopify store, the checkout could still be a Shopify backend. That Google and Shopify ended up creating this product called UCP, Universal Commerce Protocol. And essentially it just puts Shopify in every single agentic platform. This is extremely interesting, and people are still discounting the idea that like somebody's like the IT department of Skims is going to somehow make their own backend, website and checkout and handle the traffic for Black Friday and
So
all
I
on one
am going to push
platform.
back a little bit.
Yeah, go ahead.
I'm looking at the numbers, and Shopify is a great company. Aren't they a little expensive though?
Yeah. Yeah.
And I'm not saying that you shouldn't pay up for growth. They're a phenomenal company. And you and I have had this conversation. It's hard for me to justify in my mind where the Mag 7 is when they have very similar growth rates, at least with NVIDIA. I mean, how is Shopify 70 PE on this year's earnings? And then 46 times 2028. I mean,
Yeah, the biggest question for Shopify has always been its valuation. It's just one of those permanently expensive names, like a CrowdStrike or a Cloudflare or a Palantir or any of these names. It's because they're a one of one. They don't have a competitor. They grow market share so a fun statistic, at least the last time that they displayed it, I haven't seen it in a while, but about 46 new businesses are started on Shopify or converted onto Shopify for every one that they turn off the platform. And, essentially they're guiding for 30+% growth, while PayPal in the exact same market is calling for essentially negative growth. So in the same marketplace, you have such unbelievable market share gains that have been sustained for decades. It's almost like the same Costco effect. Like Costco is extremely expensive. It's because people believe that they can put up that sustained level of growth over time. Shopify, same thing. They're expensive, but they'll likely always, well, I mean, hard to put an always or a guarantee or something like this, but they're going to be around for a long time. That's why people are paying a premium.
I mean, Palantir is almost the same valuation as Shopify at this point.
I mean, that's not true.
I can show you. I said almost. It is true. So Palantir, forward basis on earnings, okay, 105 times this year, 77 next year, 55 2028.
Yeah, well, okay. If you're going out, you can go all the way out. It doesn't
No,
mean that
I'm
they're
going
necessarily...
out. I'm going out this year and 2 more years through 2028, like I always do. Palantir's got, I mean, the street's now expecting 76% growth this year, 37 and 40. I look at Shop, keep 55 in mind. I mean, they're almost as cheap as Shopify.
Yeah, I mean, these are based on their estimates that's saying that they're going to grow 15%.
Consensus from the analysts, not me.
Yeah.
I mean, Palantir's gone mollywopped. All of these companies gone mollywopped. The real question is, were they too expensive from the jump? Like, was Robinhood too expensive? Was Shopify? Was Palantir? I mean, Cloudflare went up. I'm not sure if Cloudflare ever came down. That may be the one that did not come down. But it looks like a lot of these companies, the market is saying they were too expensive. And then you have companies like ServiceNow that is trading at a really attractive multiple, and then Salesforce that's trading like a tobacco company. So I don't know what to think anymore about market perception about SaaS.
Yeah. I think like the thing that I'm going to try to avoid to do is buy the, non-market leaders. I think that they are really the ones that risk like truly being replaced. So, I think Palantir will be fine. I think, a CrowdStrike will be fine. I think a Shopify will be fine. I'd actually think the more expensive names might actually be little bits of safe havens going forward, because we are in a technological revolution right now. There will be massive changes and there will be companies that go to zero. I'd be focused on who the founders of those businesses are and if they actually have like a little bit of track record of seeing those next big changes and then adjusting accordingly. I think Toby has that. I think Toby Luckey is probably one of the greatest founders of all time. So
I don't think that Shopify is getting replaced by AI. I don't think it is getting taken to the woodshed because of it either. I just think it's getting caught up in a narrative because that's where we're at right now. There's
Yeah.
some companies that are just getting taken to the woodshed. And unfortunately, there's some really good companies that are getting caught up in this narrative. And I think you're right. The market leaders should theoretically be fine. It goes back to what I've been saying that we'll use Shopify as the analogy. Just because an IT department can use this vibe coding to do things doesn't mean you're going to run your entire back end on something your IT department made in a couple of cubicles.
Yeah.
That's just not happening. And Shopify is one of the biggest ones because what are you going to do? Take a chance on your business, like your business's livelihood off of what your IT department says that they made that can cut costs and get rid of Shopify? That's not a narrative you're going to be able to sell to leadership.
Yeah, I agree. I actually, you know what? Like, I just realized the older that I get, the reason why companies are or can charge for very expensive software is because it's not because people enjoy using that software. It's because it actually lowers the total cost of ownership. Like, they make so much more money paying for the expensive services of Shopify and the expensive chips of NVIDIA and the expensive contracts of Palantir that actually helps run their business even more. You know, going into these sort of homegrown solutions, stuff like this, I actually don't think is the concern that people should be worried about. And I called you and talked about this earlier. I think the real concern is, you know, what if a Microsoft starts getting into different services, or a Meta starts talking about shopping and commerce and a lot of those services recently? Like, I think really good teams that are bundling their services with other solutions and also being able to sort of, you know, turn their engineers into like 10x engineers are the most important. Or like those are the big fears. But yet Microsoft's getting sold off too.
I mean,
You know?
I'll show you something in a few minutes, but you're correct, and I do believe that is one legit fear. Because when you look at Microsoft, I'm bringing it up right now. I want to bring in the dynamics revenue. Hold on. So,
Dude, wait. Or actually, I'll tell you after. But I was talking to an investor today, and they pitched the coolest acquisition idea, and I want to get your take on it after.
okay, so dynamics. All I'll say about it is I looked at it in the past when they first came out, and from what I've followed up on and keeping up with the market, it is really robust and it's a real competitor now. Its revenue increased 19% year over year. That means they're winning large scale enterprise level contracts that Oracle, PeopleSoft, SAP, and Workday are not getting. And because those are who would be getting those contracts if it wasn't Dynamics. Dynamics is a full-blown ERP. It's not an HRIS. Now, what you said is critical because Microsoft has an unlimited checkbook. And if they can build a Dynamics product, which is an ERP suite, out of the blue, and obviously it's not out of the blue, it was a couple of years to build probably, but they can make that a brand new product line to bundle into their suite of products. Yes, they could theoretically be working on a CRM product. There is no question that is a possibility. And we can't say that it is not a possibility. So I would say that is one of the only bear cases that actually makes sense and has merit, along with the fact that we don't know if AI and robotics is going to reduce the workforce by so much that charging by seat is no longer the viable option, and if the revenue from agents can offset that. Those are two things we cannot prove or disprove. And I think that's the biggest problem right now, that we cannot prove or disprove if these companies are going to get overtaken by AI. My thesis is the same because this is what I deal with all day. And I have knowledge of how these things work. And I just think a lot of people making noise don't work at large companies. They're not in the decision-making process. They're not in the RFP process, and they don't understand, one, what it takes to actually select these platforms, two, what it takes to implement them, and three, what it takes to change from them. It's not, oh, AI is coming, Salesforce is dead. To get off of Salesforce, to migrate everything and to use something else, to get off of a Dynamics or a Workday or Oracle SAP, to get off of a ServiceNow, good luck. Good luck.
No, I don't think anyone's questioning that. I think that
I see it all the time on X.
I think people are more questioning, okay, well, are future customers going to go to Salesforce? And like, is future growth going to slow to a zero? And then it comes to, okay, people are slowly starting to migrate off. Not that everyone's going to start, pick up their bags and leave next quarter, but, are people going to explore their options? I think businesses are decently smart and they do shop around.
For some products.
Yeah.
For others, they definitely don't. I mean, look, a lot of these contracts are 5 years. A lot of these contracts have implementation costs. Some of these platforms, you have to hire consultants to help out. It's a big undertaking to implement this stuff.
Yeah. I wanted to potentially.
So what's the acquisition idea?
I was talking to a very interesting investor who just opened my mind up to a couple really cool ideas, but none of them are really public market ideas. Okay. But one of them was, is there a possibility that PayPal is getting so cheap that a firm ends up buying them?
That wouldn't even cross my mind, but maybe. I mean, Chris and I talked about this the other night. I mean, I'm thinking about coming out of retirement and becoming a vulture. I mean, PayPal at $38 billion. I mean, make me the CEO for 2 years. I'll turn this shit around.
So a firm is a smaller business, but do you know who the founder of a firm is?
No, I have no idea.
It's Max Levchin.
Okay.
Does that name ring a bell?
No.
So before Elon Musk and before all the people that, people look to as being sort of the founders of PayPal, they weren't really the founders of PayPal. Elon Musk founded a company called X, and then they did like a full merger with another company that was a part of their office as well. But that company was actually PayPal, and it was founded by Max Levchin. So PayPal was founded by Max Levchin. And I wonder if there's an interesting comeback story that would be so beautiful.
I like it.
Where Max Levchin ends up taking back the company that originally, he started, and under his control was actually a full-on growth story.
So let me ask you this. Does that chart look interesting to you right now on a 1 month? PayPal looks like it bottomed.
I mean, maybe I'm not a technicals guy. Like, they could end up posting that EPS is decreasing even faster.
No, I get that, but I'm not a technicals guy either. But this looks like a freaking bottom. Like, it really doesn't want to go below 40, and they're going to buy back 18% of the company this year. Thinking about this, the market cap is $38 billion. They're going to buy back $6 billion worth of shares. Think about that buyback yield.
Yeah.
And if I was CEO, this is what I would do. I would take $5 billion off the balance sheet right now because they have about $10 billion in cash on hand. I think it's actually 10.3. Let's get the exact number. 10.4 billion in cash on hand right now. Take 5 billion of this, buy back 5 billion worth of shares today or tomorrow, and then do your 6 billion of free cash flow buys throughout the year and buy back almost a third of the company. Watch your EPS skyrocket.
The EPS would skyrocket, but then they'd be cashless.
What do you mean? They still would have 5.4 billion in cash on hand with another 4.3 billion in long-term investments. The company only has 9.9 billion in debt. They still have a 1-to-1 cash ratio on debt.
What's the short-term debt that they have?
Short-term debt doesn't matter because that's a portion of long-term. And they only owe they owe 1.5 $4 billion of the long-term debt this year.
Yeah.
I'm telling you,
I
they could modify the earnings so easily on this.
What I really don't like doing, for real, PayPal might be good for the cigar butt investors, and that might be what it is.
It's not cigar butt. It's doing $6 billion free cash flow.
Yeah, I know, but that could be $5 billion next year. Who knows?
It could be. We don't know.
Like now they're guiding for negative growth, and they just ended up missing. What if they miss on their declining EPS?
They're not guiding negative growth.
Sorry?
They're not guiding negative growth.
Yes, they are.
The street has them at 3% year-over-year revenue growth. 39 analysts.
Yeah, and EPS?
EPS is 0.64% growth.
Okay, well, that's not what they guided.
44 analysts. Yeah, what they're guiding for, what they are guiding for, low single-digit decline on EPS is a FUD to sandbag, just like Noto. How the hell do you have negative EPS growth when you're going to buy back 18% of the damn stock? That math isn't mathing.
If you make less than you did the year before, that's going to hurt.
Not saying it's not going to hurt, but they're going to financially engineer it.
And then I worry that as, like last year we were growing and now we're potentially at this sort of peak. I'm not necessarily sure that the let's say we're at the absolute maturity of PayPal and now we're potentially dying, that is like a slow decline from here.
Yeah.
Who's to know that doesn't ramp and it's just in free fall? Like, as we're seeing, Shopify continues to make more and more improvements to Shop Pay. Apple's doing the exact same thing. Google's doing the exact same thing. And there's less reasons to use PayPal.
The problem that I have with the thesis on PayPal is every year that I've been following this company, PayPal's dying, PayPal's dying, PayPal's dying. But every year, they still grow year over year in revenue. Like, it doesn't look like a company that's dying to me. And that's what's so compelling about this at this point.
I agree, but growth has slowed to almost nothing.
Yeah, I agree with you. Growth is pathetic at this point.
Yeah, but what if it continues to slow?
That's why it's at $40 a share right now.
I just have a better understanding of buying growth companies. And there might be a lot of opportunity in PayPal, but I think its best days are behind them.
Best days of growing the business are absolutely behind them. They're never coming back. They're also not a company that's been out for 5 years. So the real gem in PayPal is if they can sustain the free cash flow and buy back so much of the stock over the next 2 to 3 years that EPS goes off the charts. Because at some point, then one, the street's got to give them some type of multiple, or two, somebody's just going to acquire them just for the free cash flow engine. You may even see that this year. Now, I don't make investments on the hope that somebody's going to acquire something because I have no idea if that's going to happen or not. But the numbers are incredibly compelling at this point.
Yeah. Yeah. The numbers were compelling, I mean, at 60.
Not like this, though.
No, I know, but like, who knows if they're not more exciting whenever the buyback's at 25%. Like, I mean, I don't want to.
Where are you on Zeta? Their CEO came out today, made a statement on X. Zeta made a statement on X on the company account. I'm ready for next week.
What was the statement?
Oh, I'd have to find it. They're excited about earnings.
Yeah. Yeah, I didn't see. You got to tell me. It's not a name that I'm following. It's not even in my
Whoa, it's not even in the public portfolio?
No, maybe someone has given it to me, but
you know what? I'll send you some money. Go buy it.
No. It's all good.
I'll send you some money for the public portfolio. Go buy it.
You know, what's funny is
Don't
Chris,
worry,
I
I
think,
got
sent
you
me
covered.
something like $100 to buy PayPal last time, or I forget what name he told me to get, but yeah, that's so funny. I'll actually see. I'll find out what Chris sent me money for. Here, let's see if I can find it.
So they actually put out a video 8 hours ago. The future of marketing is powered by AI. Hear why from our leadership team and top industry experts. So they put out a minute video. I saw
Okay.
something else. I think it was on their CEO's account.
Okay. Why is that exciting?
I'm very excited about this. I think Q4 they're going to crush it. This has baby Palantir vibes all over the place.
Steve just donated $20. Why not? Let's add some Zeta. Since Steve has Apple as well, all Steves should.
I love it. I love it. Sebs, thank you for the super chat. Cloudflare going to run up huge with agentic AI. You could be very right. Mr. Taco Bout, Zeta down 35% year to date. Absolute criminal discount. I agree. And then non-point. Why not? Let's add some Zeta since Steve has Apple and all Steve should. I mean, look, I started a position. I'm still buying. I think that Zeta is going to be the future. I think it's very undervalued, especially at a 4 billion market cap. And this is a company that's about to flip operating and net income to positive. They're free cash flow positive. Balance sheet looks great. You have 15 consecutive quarters of 20% year over year growth. You have 18 quarters of consecutive adjusted EBITDA expansion. I think this is going to be really good. And the reality is, if this goes to 20 billion, I don't think anybody's going to be surprised. And that's a freaking 5x from here.
So the non-point guy that just donated the $20, his name's also Steve, by the way. This is Jonathan Price. He's been all over Vertiv, and I should have listened, man.
I told you. I told everybody.
I mean, I'm going to give the win to Jonathan, but
I mean, I'm on the record on seeking alpha with Vertiv.
all right. Hey,
Just saying.
the guy comes with receipts.
I got receipts.
You want to see a heavy receipt right here?
So, yeah, after I show this one. January 2nd, up 41% since.
All right.
I got receipts.
There you go. Is it a strong buy?
I got receipts. I'm bullish on it. How about QXO today? Nobody wanted to listen to me on that because it's not tech.
Hey, you know how to pick them. That's why you're the GOAT, man.
I mean, I tried telling everybody. Some people in my chat did very well on it. I mean, I called this out in October, 49.5% since October, or end of October, October 28th. That little dot right there.
Yeah.
This thing, I would not be surprised if this thing keeps running.
What's the great part about it is it's not going to get any sort of fears around AI or something like Anthropic's not looking to replace QXO or something like this. Like, honestly, there's going to be a lot of those types of stocks that are going to do very well over the next 5 years.
I think so.
I have
look at this.
$20 for you two to give Amit some shit about his new haircut. Well, all I've said about his new haircut is that I'm just not used to it. Like, I actually think it's fine, but I'm just so used to him looking a certain way that whenever he doesn't, it's like if I shaved off my mustache. You know, everyone would be like, "What the heck?" That's about as much crap. But seriously, guys, thank you for the donations, but they're not needed at all. Thank you. Really appreciate it.
I know Chell's got in on QXO.
There you go.
Yeah, a bunch of people did. I think Rusty got in. Carl got in. Yeah, Carl's in since 1590. I mean, QXO just made a lot of sense.
Yeah, 49% since October is crazy.
Yeah, I'm getting ready, man. I think the market's wrong on Zeta. I really do. We'll see. I could be wrong. I get things wrong. So, what was the
Um,
receipt you wanted to show?
no, it's just on SoFi, trying to alleviate some fears here.
Oh boy. Well, I guess we're gonna have to talk about Hood and SoFi in tandem because Hood just reported.
Yeah. I've got some receipts on Hood as well. I can bring those up.
Yep. So, where are you thinking about Hood's quarter?
Well, bring this up, and then I'll drag this over to Hood.
I saw you put this out before.
Did you?
Yeah.
SoFi's website traffic. Everyone is discounting this and saying that this is AI agents, and I have a way to absolutely disprove that. Regardless, we saw a 46% year-over-year bump. It was also the biggest month-over-month bump in terms of growth in website traffic for SoFi. So 28. I would have been happy with 25, like a slight increase, like been on the trajectory that we were on before, but no. Big tick up on SoFi's website traffic. Now, the interesting thing about that, and why I say that I can have a little bit of ways to defend this. First off, we saw massive growth in lending clubs numbers as well, and upstarts. So anyone that's like lending out any form of a personal loan is seeing a lot of traffic right now. So I think it's more thematic than not. However, whenever you go ahead and look at all the companies that I track, which are all just fintech companies for website traffic, none of them out of that list is growing as fast as SoFi. So if there was some agentic bot scraping, something along these lines that is leading to that growth, you would see it across all of the names. But you're not seeing that. Hood saw a slight tick up as well. There were a couple companies that saw slight tick ups, but nothing like what SoFi saw. So even in a sort of agentic space right here, there's different companies that are benefiting differently. SoFi's built a little too good. Here, share the screen. So what we ended up seeing is that, Chime ended up putting up great numbers, not the highest they've ever seen, but slightly better than expected. Nubank, Robinhood actually put up decent numbers. So sort of a little bit better than November and December. And that also shows up in the, January traffic as well for the amount of trading volume. Coinbase didn't see more traffic. PayPal, obviously not after December, because December is a holiday spend. Sort of you see that across October, November, December. However, Venmo actually did beat new highs after December. Cash App, another new high. Upstart, Lending Club, like I said, those companies are also doing very well. And then Ally doing, decent. But none of these are growing nearly as fast as what SoFi is growing at. Okay, you can see that across here.
Well, that's what Noto was complaining about when you and Tevis interviewed him, that they're using a different valuation method for these other companies and not them.
Yeah.
I mean, I've often complained about that when I look at things because it doesn't make sense why there isn't just one standard. I mean, $1 is $1 of revenue, $1 is $1 of EPS, and 10% year over year is 10% year over year. I mean, math is math. Just because you're in a different industry or it's three companies across the same industry, it's the same freaking metrics.
Right. Exactly. If you bring home $1 of net income, it's still like...
Yeah. I don't care if you're selling widgets or AI, you're bringing home $1 of net income. I mean...
Yeah, I mean, there is still intricacies there. Like, just to be fair, because like SoFi, although their revenue is coming in, SoFi is one of the very few businesses that could actually show negative revenue. Not many companies can say that they can show negative revenue. My understanding is, a Robinhood could not do that. But SoFi, because they end up looking or they count their forward potential earnings on loans as revenue today, that could actually hurt if those loans end up going to zero somehow, if we have some catastrophe. So, That's the only difference I find, just because, loans could blow up. It could hurt their future growth. But yeah.
I think that SoFi is going to do really well this year operationally. I'm not so sure anymore that we're going to get the outcome that we want on the share price.
I'm still pretty optimistic. It's Q1. We got 10 more months. Opinions can change super quick.
Yeah,
it was
we
what
need a few things to happen.
Yeah. What are those things?
Well, we need S&P 500 inclusion. That's one of them. That would give it a lot more credibility.
SoFi in June of 2025 was a $15 stock. And then, by November, it was a $32 stock. Like, things can change.
They absolutely can.
As for Robinhood, I thought that the numbers were great. I think that people need to focus on more about the KPIs and the sticky growth than just what they're doing on, like if the market is collapsing, of course they're going to make less and less revenue. Like, if no one thought that they were a cyclical business, like you're in no man's land. Like, you're lost, bro. However, whenever you take a look at the fact that, they're growing banking clients, futures, prediction markets, Robinhood Gold subscribers, retirement, all of these things, whenever we turn around,
revenue is getting big.
Which one?
The gold membership revenue is getting big.
4.2 million members.
Yeah, it's getting really big.
Dookie Pie says, Amcor, Nebius, and IREN are next in line. Next in line for what? Next in line for what?
Nebius is reporting tomorrow.
Yeah, I'll be live for that.
What time is it?
I'll be live at 6:55 a.m. I think the call is at 8. And honestly, we're not expecting that good of numbers because the Wall Street is expecting some pretty insane guidance. Or like they're expecting the numbers to come in extremely high. So be careful. But I'm not buying them for next quarter. I'm buying them for the next few years.
Nebius should do very well over the next few years. There's just the one I need to see. I cannot wait for Oracle's earnings. I'm so interested in what they're doing. That's another one I may go bottom fishing on. Am I sharing this? Or are you just playing around with that?
Yeah, I'm just looking at Robinhood's numbers. Like we can explore it, but
you know what's crazy?
Yeah.
Technology is getting sold off, and the S&P's at 69.58. We're basically at all-time highs. The Dow's over 50. We're basically at all-time highs, and tech is getting absolutely crushed. Here's the problem. There's companies that are expensive. Old school conglomerates are catching a bid right now because somehow they're sticky and safe, and people are making the case voting with their wallets, and Microsoft does not have a sticky moat. It's sick. It is absolutely sick. Microsoft moat is so damn sticky, people don't get it.
Yeah.
That company deserves to be $600 right now.
But my concern is, why is the narrative going to change over the next few years? Like,
if their profitability keeps growing, why shouldn't it?
Yeah, but I think that they definitely will grow as earnings grow, but does that give them a bigger multiple? So like maybe they grow earnings, let's say at 20% or 15% over the next 3 years, but they keep the same PE ratio as they do now. maybe the company only grows 15, 20% per year, which is still fine. But I think what investors are also excited about is that multiple expansion, which would, sort of couple on top of their growth. But maybe that doesn't happen.
What I can tell you is these numbers don't make sense, sir. How is Microsoft $1 trillion less market cap? $1 trillion than Apple.
Because I think, this is
they have more growth. They have more growth than Apple. They generate more profitability, and they have better margins.
But the type of product, every number that you're looking at here is a trailing number, right? And so Anthropic is not going to replace the iPhone. Is Anthropic going to replace?
It's not replacing Windows either.
No, but they're not making a lot of money off Windows. They're making money off the products that they're selling.
Not going to replace LinkedIn or Office 365. It's not replacing Azure.
I think they might suggest that it will replace Microsoft 365.
Good luck with that.
I think that is the concern.
Good luck with that. There's something called patents also, just saying.
What is that?
There's something called patents.
Patents. Yeah, what patents? Like, you're using another Excel spreadsheet that's not Excel.
I'm sure that there are things different that Alphabet got them for also. But at the same time, you look at these numbers, and even though they're trailing, this is what they've done in the TTM. And every year they keep doing more. I mean, Microsoft has generated the most EBITDA over the trailing 12 out of any company in the market at $175 billion. They're doing more than $3 billion a week in EBITDA. A week. It's crazy. And this is only a $3 trillion company. I don't know why it just went to NA. But we saw it before. It's a $3 trillion and Apple's $4 trillion. It doesn't make any sense. And the market is giving companies like Coca-Cola and Walmart a bid now. It's wild.
But why is this going to change over the next 3 years, 5 years?
It should all be based off of profitability. But it's not.
Should be. It all
but
should
it's
be.
not. And I know that. But it should be based off of profitability and growth rates.
Mm-hmm.
It's not. Its sentiment comes into it a lot. And people have this idea in their mind that because Walmart, you need to buy groceries, that it's safe. And that because everybody loves Coca-Cola and it's sold in 200 countries and territories, that's safe. But how is Microsoft, how is Meta not? Think about this.
I agree.
How many people are addicted to Instagram and Facebook? They are the best products ever because they don't have to make any content. Every user that has it makes the content. It is the greatest flywheel ever invented in business, and Meta is one of the cheapest companies in the market.
Yeah, yeah, and also artificial intelligence is not going to somehow recreate a social media platform, because the thing that makes Facebook so good is that your friends and family are on it.
Exactly.
So you can't, you can't replicate that.
They could make just as good of an app, but it's going to be a shitty app if nobody posts on it.
Yeah.
So nobody's leaving Instagram, especially content creators that are getting paid. So it's just, we're in a really weird market right now that there are companies that should be much higher right now.
Yeah, it's so funny. Paul's in chat saying Tanner loves patents. I hate the patent defense whenever people say there's patents. Like, especially in fast moving, like innovative tech companies, they never ever hold up.
Well, that was part of my thesis with IBM. IBM had one point, I think it was 3 or 4 years ago, they had the most out of any technology company.
Yeah, I know. What a great investment that was.
You making fun of IBM's investment?
Yeah. Yeah, it's like probably historically one of Warren Buffett's biggest failures. Like,
Warren Buffett sold it before it went up. When I was talking about it, was $118.
No, you can pick a specific timeline as to when it went from, peaked or
it was dead money when it was a legacy hardware business, but now it's not a legacy hardware business anymore. Yeah. They're consulting in an AI company.
I think these patent defending businesses are the scum of earth, and they all suck. And the people that invest in those types of businesses to think that like they're super defensible is a weak argument. I hate patent businesses. I think the super strong companies, like even this, everyone argued last time because I said Tesla doesn't do patents. Then people are like, Tesla has 6,000 patents. It's like, no, they do that so then they can essentially avoid patent trolls, but they are not actually defending those patents. And a lot of their actual stuff is open source and they win via best design. And Elon Musk has been extremely open about that. But yeah, I mean, I don't think Microsoft should be a good investment based on like they're going to win by innovating, not by trying to defend whatever the heck Microsoft 365 is.
I mean, people are not getting off of Azure. People are not getting off of SharePoint. Their whole suite of products works for enterprise business clients. And that's the most important thing for Microsoft. It's such a sticky thing. And we all we see is quarter over quarter and year over year growth up and down the line for Microsoft. To think that they're going to get disrupted, they're the ones doing the disrupting. Okay. Like if AI is this big thing, Microsoft is the de facto winner just because of Azure and their data centers. So
Yeah.
it's hard to fathom a world where AI cannibalizes the company that's hosting it. I mean, it can't host itself.
No, I agree. I think Azure's going to stick around. I'm not like, I'm a shareholder of Microsoft now. I'm excited for, you know, a lot of what they have going on. I think a lot of software is going to be defensible. But I don't know. I just wouldn't bottom fish in this market. Like I saw people talking about how excited they are for like HubSpot and stuff, and I'm like,
I don't even know what
man.
HubSpot is.
What?
I don't even know what HubSpot is.
Yeah. They're a CRM, but yeah. Or at least I think they're a CRM. Yes, they are a CRM. I don't even know why I'm questioning myself there.
Yeah, I mean, look, there are companies that are going to have a lot of problems. I think that there are some that will turn around. The question is when. And we need that inflection point about what's able to be disproved and what's able to be proved. And I don't know when that comes. So software is a very hard thing to invest in right now. There's no sugarcoating it. Are there plays that can work out? Absolutely. But I mean, it is not easy.
What do you think about Figma?
I know nothing about them.
They're getting a little too cheap.
What do they do again?
What?
What do they do again?
They help with design and like UX UI. Like they'll help designers, like app designers and stuff, create apps and make, you know, it look really good. And
this is a freaking horrible chart. Jesus.
Isn't that crazy though? This is like whenever they went public, this was like a darling on Wall Street.
Wasn't it one of the only companies that people actually had access to in the IPO?
Yeah, I mean, I think SoFi and Robinhood got a hold of it, and Adobe tried to acquire this company for $20 billion to try to build out more of like their design and like help with creators and stuff like this.
All right. What do they do on? So they're an $11.2 billion company, and they're doing $1 billion in revenue. Negative operating income.
Dude, they IPO'd at 50 billion, ran up to 120 billion, and now they're at 10.
But okay, this makes my point for Zeta at this point. Figma. Like, these numbers suck. These numbers are horrible.
Yeah, it's hard if you don't understand or don't know the business at all.
I don't need to know the business. The numbers suck.
I mean, you would miss out on a lot of companies by just looking at the numbers. The stock is not a math equation, bro.
Such big tranches of other operating expenses. What is in this 1.3 and what is in this 1 billion in those quarters? Because outside of those two huge expenses, the numbers wouldn't be that bad. But what is buried in there?
I don't know, but I'm sure you could go find it. I'm more looking at this company is down 80% from where it IPO'd, and our designer's about to get like, are we going to get to a space in artificial intelligence where you can essentially take a picture of something and then edit it on ChatGPT? I think that's the question.
I mean, I would say yes. I mean, why wouldn't you be able to? You can do it right now on Gemini or Nano Banana.
Yeah, not really the same, but yes.
I mean, you pretty much can. You can take a picture and you can type commands and have it do it.
No, I get
And
that.
it's the worst it's ever going to be today.
No, but that's not going to turn the buttons to be actually movable and usable and connect to the next web page whenever you're creating an application.
They don't have that in the future.
No, that's what I'm saying. But, you know, are all these companies, are the Figmas, are the Adobes, are all the creative apps going to zero?
Adobe scares the shit out of me for that exact reason, because I'm not in that space and I just don't know if they're going to lose the lower end clients that are just consumers paying for the $20 a month for Premiere. I think enterprise, they'll be fine. I just don't know enough on the consumer side. So they're free cash flow positive now. I don't know. The numbers aren't good. Where's the street say that they're going forward? I mean,
they're in growth mode. I wouldn't focus too much on their EPS.
Yeah, I'm looking at the revenue. I don't know. I guess. I think it's expensive at 11.5 or 11.2 billion.
I'm curious from your like whenever you go to research a company.
Yeah.
Does a company have to get past the sniff test? Like, when do you start looking deeper into a business?
I mean, take Zeta. That's not a company I would typically invest in, right?
Well, let's take Figma.
We just did. The numbers suck. I wouldn't even bother looking at the deck.
Yeah, so that's what I'm saying. Like,
I mean,
how do you know whether to pick a company and go into further details? Because just the way that I watched you immediately say no to Figma was surprising.
Okay. So here's what got me interested in Zeta. All right. And this is why I look at the freaking income statement on a quarterly basis and they're growing, but they're about to flip operating income. They just did in the last quarter. Net income is going in the right direction. They're almost profitable. EBITDA, they've been profitable. This reminds me of a baby Palantir, baby SoFi with this. You look at the balance, I'll put it on an annual basis real quick. I mean, they're already doing over $1 billion. Good growth. When I look at the balance sheet, $385 million cash. Long-term debt, 200 mil. So double cash to long-term debt. They have a very low share count at 240 million shares. And here's your favorite thing. When you look forward, growth is accelerating. They're expected to do 28.2% this year and 34% next year. And
I do like that.
After listening to some of the conversations with the CEO and looking at the acquisitions that they just did with the Marigold acquisition, growth could accelerate in 27 also. There's a decent possibility of that. And I looked at it and look, I gained a lot of respect for Zeta listening to the Dan Ives interview with their CEO, because he said to the board of directors, which is a very hard thing to do, in 2017, they were doing $50 million of EBITDA. And we're like, we're going to gut this. We're going to make no money for the next 3 years. We're deploying 400 engineers and we're recalibrating and building this out for the future of AI, before AI was a thing. They got 15 quarters consecutively of 20% year-over-year revenue growth. They have 18 consecutive quarters of adjusted EBITDA margin expansion. This is a company that, keep in mind where Figma is, right? Zeta's market cap is 4.2 billion. with better numbers and more growth. And that's why I'm saying, like, if a company like Figma is 11 billion, tell me Zeta can't get to 11 billion. I mean, that's basically a 3x.
Yeah, I think that. I mean, you're just looking at the numbers, though.
I looked into the business. I like what I'm seeing on the business. Every dollar that companies spend, they get $6 back through the advertising rev.
Yeah, I
Like,
know, but the trade desk sports those types of numbers as well, and then look
I
what happened to the
mean,
stock.
this is a company that is profitable. They're free cash flow profitable.
These can all be said about trade desk.
Okay. And the trade desk did very well until it didn't. I'm just looking for Zeta to get to 15 to 20 bill, then I'm getting out.
What are they at now?
I told you 4.2 billion.
No, I'm just saying. By the way, I'm not being anti Zeta. That's not what I'm even trying to do. I just think like the comparison between Zeta to like a Figma or something like that, and saying one investment is good and one investment's bad. It's like Figma for real does not have competitors. Like they're a one of one, and that's why people pay a lot for that business. I don't know.
I don't know why you guys
even
want Amit and me to debate Zeta. We both own it. Like,
Sorry?
no, there was a comment, need Amit and Steve to debate Zeta. Amit and I are both bullish. I mean, Amit owns it. I own it. There's nothing to debate.
Yeah, they both like it. Yeah.
I think if you researched this company and took the trade desk out of your mind, I think you'd end up liking this company.
Yeah, but I can't take the trade desk out of my mind.
Why? Did you lose money on it?
Yeah.
Oh, well, okay.
Yeah, I did. Because I bought it after the initial crash at like, $60, and then it ran up to like 75, and I was after the next quarter, and I was like, you know what? That was a good dip buy. I know what I'm doing. I love Jeff Green. I love the industry. Advertising is a great space. And, they have this new AI platform that everyone's going to get super excited about. What's the name of that platform? Kokai. Kokai was sort of, the next, like, it all just reminds me of like Athena and all of these platforms. Like, we have this new platform. It's all AI based. It's going to change the game. And it just, I just get all these feelings. And then, of course, they missed on numbers because the competition in the space ramped up from Google and Amazon, and Trade Desk had to guide lower, and they got stomped out. Like, yeah. And Jeff Green was an absolute advertising giant. I mean, you cannot pick a more exciting name to run a company in the advertising space. So that's why I'm just scared to run into, and the lesson that I learned from the trade desk is that I need, if I'm going to be in the advertising space, which I think is super exciting, I need to own the user. Meaning, I want to own the place where the pricing and the end point of the advertising, the customer goes directly to that domain. Facebook, Google, Amazon, YouTube, Reddit, all of those places are where the customers are actually going. And then those companies decide the pricing. And at the end of the day, as long as they can keep growing on users, they can eventually find better conversion rates and better pricing on advertising. And the companies that tie into those, on the buy side of the advertising, on the sell side of the advertising, I think those names flop in and out. And those names can change very, very quickly. But, those are all the names that I'm very excited about. And I own all those that I named: Reddit, Meta, Google, Amazon. I like those.
We'll see. We will see what happens. Zeta reports next week. Let's see what happens. I mean, look, they could go down to 12 or 14. There's no question about that. I do think that if they do, I'll double down at this point.
Yeah.
Yeah.
People
We'll
use
see.
text, email sites, etc. I completely agree. I'm not saying there's not a business for Zeta. It's just hard to get a lot of transparency and visualization into how they're doing. It's just for me. Like whenever I make these comments, people are like, "You're investing wrong." I'm like, "No, it's just for me. That's
Yeah.
it's how I sleep well at night."
There's no right or wrong way to invest. What works for Tanner works for Tanner. What works for me works for me. That may not work for other people. I mean, Uzi and I went to lunch today. We had this conversation. He's in the chat. I mean, we legitimately had a 20-minute conversation about exactly that. And, I think that so many people get caught up on nitpicking about things. The idea is not just about making money, but Tanner said it, how you sleep well at night. Like if you are going to stress out about something to invest in, don't invest in that. There's no reason for that.
Well, Uzi in chat is saying Meta won't give your audiences emails and unique IDs. Who gives a shit? Like you're just taking all the KPIs for Zeta and going, Meta doesn't have these. It's like, okay, well, take all the KPIs that Meta has and say, hey, Zeta can't cross-sell someone from Facebook to Threads. It's like, does that mean that Zeta's a bad business?
Do me a favor.
Yeah.
Look into Zeta. Take 20 minutes and look into it.
I had someone on my channel to, give me the deep dive on the company for an hour. I wasn't like,
okay.
I think if anyone gives you the bull case on a company, they're all exciting.
I'm not disagreeing with that. That's why I'm saying that you should look into it on your own.
Yeah. Like if you listen to any earnings call for every business, like you'll be sold on tobacco names, look at
You're
all the
talking to
exciting
the
things
wrong
that are
guy. I'm invested in those.
No, I'm not, but I'm just saying I was going to go through the whole list of every publicly traded company is going to be talking about why they're an amazing business.
Yeah. I mean, look, the numbers on Zeta are exactly what I want to say because it looks like growth is accelerating and they're about to become net income annualized profitability. They're trading at a good multiple. And I think that they can add billions to the market cap, and I think I can make money on it. I mean, this is not a investment I'm looking at for 10 or 15 years. This is one of those investments that I think can do something in the next 2 or 3 years and make me a good amount of money that I can extract and throw into something else.
It's definitely way more exciting here at 16 than 24. Like, I mean,
yeah,
I think whenever I got pitched on it, it was like $24. It's like that does put a completely different multiple on the stock. So
I will tell you this. I'm not going to say the person's name. I'm not going to say the company. I was talking to somebody today at a very big investment firm, and I need him to do something for me. And we had a conversation for about 10 minutes, and I asked him something, and he asked me what I'm looking at, and I said, "Well, I really like Zeta here." He's like, "What's Zeta?" And this is one of the big companies. And he starts looking. He's like, "Oh shit." He's like, "Our firm has a 27 price target on it." And he's like, "I'm going to look into this." I mean, I don't know. We'll see.
I'm going to find that firm right now.
I'll text you what firm it is.
I'll just guess.
Look at the private chat.
There's a couple of companies that are. There's only two businesses with that.
Look at the private.
That was one of the companies.
Yeah.
Okay. Very cool.
Anyway, what are you getting into? I mean, there's blood in the streets. Are you gonna pick at anything here? Or are you gonna wait and see what happens?
I got no money, man. So, it's weird. I'm sort of thinking like, what's the reason for the sell-offs on some of these names, like the software names and stuff like this? And why would that change? Like why? Figma as an example. getting beat up on the idea that ChatGPT or Anthropic can essentially recreate their product. Is that going to be solved? Like, are people going to somehow say, no, you know what? Figma is actually going to be here and stick around as those models are improving? I only think we only get closer to replicating Figma over the next few years. Whether or not they are able to do that, I think that sentiment is only going to sort of get more worrisome as the models improve. So I don't want to buy names that are subject to that sentiment just keeping them low. I want to buy names that are a little bit more insulated.
I got it.
Or like Nebius might even be one. I think the big focus on artificial intelligence is very, very real, and they're only going to get strengthened by that growth. And I know the company, and I believe in it. So I like Nebius.
I'm agreeing with that.
Or I like Microsoft and Google Cloud and AWS here, because they're only going to get strengthened by, AI. But like CRM, I don't know if I would buy CRM. I just, and not even that I think that their business is going to die. I just don't know why the sentiment would change anytime soon. What? Because they put up another quarter of good earnings? They've been doing that for, years and years and years.
There needs to be an inflection point. I can't answer what that's going to be. Salesforce can go down to 150. I mean, that could absolutely happen. Is it warranted? Probably not, but it could go to 150. I mean, at some point, it's going to get even more cheap. So who knows?
Yeah, I don't even worry that these I think eventually the bleeding will stop, but I also don't think that they need to rally. What if they just stay where they are? They just stay stagnant and sort of underperform.
So I got somebody giving me great advice right here. You ready?
All SaaS will become PayPal.
Tanner, I should just buy the S&P 500 and call it a day.
Yeah, the S&P 590.
I think that's a typo.
No, I know. You should. What are the 90 companies that you would add to the S&P?
Before we do that, I mean,
listing them off.
I guess Action doesn't really watch either of us that much. I buy the S&P every 2 weeks. I have a lot of S&P. It's a cornerstone of my portfolio. I love the S&P. So I am an active buyer no matter what happens on the S&P.
I'm not.
I've tried to get you to become one.
No, I would have immediately sold out of it to go buy original. After all this dip, I would have just taken it and bought what I already like.
Yeah, I don't know. I'm slowly bottom fishing. I told you I started position ServiceNow.
Mm-hmm.
I could be wrong. I have a $75 where I'll buy more if I'm wrong. Dookie, thank you very much. $250 for milk, $250 for mustache cream boys. I don't even know what that means. What does that mean?
Dude, I don't.
Dookie, you're gonna have to be more.
Do not call us cream boys. That's disgusting.
You're gonna have to let us know what this means. Diego, Tanner, Steve, are you thinking we will see the highs in tech and finance this year like we did last October? Just your guess. Yeah, I think we're going to rebound on tech. I mean, finance, I think, is just going to do well in the lower rate environment. But I do think tech's going to rebound. What about you, Tanner?
Yeah, it's a midterm year. So there's always those types of concerns that there's the technicals are not on our side this year. But I don't know if I'm as certain that all of tech is going to return. I think individual names are going to return. And I think that those are going to be more niche, very specific software names.
So let's do it like this. The technology index, what is it, VGT? Yeah, the
IGV.
Vanguard Information Technology.
Oh,
Do we
sure.
think that this is going to run? Hold on. Yeah, I mean, this is sideways right now. I mean, that's sideways. It's down a little bit. 806, 807 was the high. It's at 748. It's been sideways since October. Biggest holdings are NVIDIA, Apple, Microsoft, Broadcom, Palantir, Advanced Micro, Oracle, Micron, Cisco, IBM. So it's got everything from software to chips, and they got 324 companies. I would say that we're going to see all-time highs on this. It may not finish there, but I think we see all-time highs sometime this year on this fund.
Yeah, I could see that. I thought you were talking more about like IGV, like the software names.
No, just broad-based tech, because I mean,
Yeah,
there's
yeah.
a lot of tech that's NVIDIA's not at all-time highs. Microsoft's been sold off.
Yeah.
Amazon's sold off, even though Amazon may or may not be considered.
I think Palantir will come back. Like I think those names are going to come back.
Yeah.
Yeah.
David, the AI paradox is AI learns from humans, right? So humans proxy AI. The axiom is that AI could surpass human brain, not happening.
It's not really
AI is
true.
going to surpass the human brain in like, what, a year and a half, 2 years?
Yeah, that's not really true. So I think a lot of the data that actually AI is going to be training on is synthetic data. So it's not just learning from us. It's actually going to be learning from itself. But yeah.
Yeah, I think that we're going to see AI scale tremendously. And here's the big thing. This isn't even going to be the year where CapEx stops. Like, we're going to have more CapEx next year. So I still think all roads lead back to NVIDIA. And I am so excited for NVIDIA to freaking report in 2 weeks. Probably not as excited as Tanner. But I'm so damn excited.
Yeah, very, very excited. Cannot wait to see Guide. Bro.
I want to show you this.
It's going to be so exciting.
I'm going to get you even more excited. You ready? Because I've shown it to a couple of people, but I haven't shown it to you yet. And you may have seen this on X. I wrote about it. The freaking CapEx of the hyperscalers in 26. Okay. And here's the big thing. This is accelerating. So in 2024, CapEx accelerated by 55%. In 2025, it accelerated by 64.5%. This year, it's expected to accelerate by over 70%. Are we, and think about this. So for 2026, 610 billion, they're adding 252 billion. Tanner, here's the question. In 2027, do you think we're going from 70% down to 0% or negative? Or do you think maybe we do 20 or 40%? Yeah, I would think we do at least 20, 40%.
Yeah, I don't think we're going to surpass 70% year over year, but I actually think it'll be higher than what people expect. I think it'll be probably closer to 40%.
I mean, and if you do 40%, you're talking about like 870 billion in CapEx next year. Just from four companies. From 4 companies.
Yeah. And then honestly, you're going to need to start tacking on the neo clouds because they're going to get so big so fast. So like the Nebiuses, the IRENs, the Ciphers, like all those, they will actually tack on, like they're no longer playing with small numbers. So you tack on like dozens of billions of dollars just by adding a couple of those names.
And here's the other thing about the CapEx. It's actually very bullish that Microsoft ends their fiscal year end of June, because that means when they report at the end of July, they're giving guidance for their following fiscal year 2 quarters before the other 3. They have no choice. This is a prisoner's dilemma. They have no choice but to come over the top now. If Alphabet did 180 and Amazon did 200, Microsoft is going to have to come out and put up a crazy number for them next year. And then these other ones are going to have to come over the top also.
Yeah, yeah. There was a comment really important in chat here that said, what you guys are saying is all known information. The market will do what it'll do. Clearly not rewarding these names, said Andrew at 914. I agree with you. But just because things are known information doesn't mean that they're believed information. So I think my perspective of the market is different than what the market is saying. Like Jensen said, he's going to do $500 billion over the next 5 quarters. Go and read what analysts think is going to happen over the next 5 quarters. It does not add up to 500 billion. They do not believe what he's saying. So
and look, this is where it comes down to, can you stay solvent longer than the market can stay irrational?
As long as I don't get into margin.
I think I talked you out of that today.
Yeah, I wasn't
I
really.
hope I talked you out of that.
Yeah. But yeah, because things can stay dumb so long. Like, I know that we've felt like, there's been like a, maybe let's say 6-week, like really big sell off, maybe a little bit longer since like absolute peaks on some of these tech names. But like things can be bad for years. And I don't think that we've seen that in a while.
We have
like where companies can just stay extremely depressed for long periods of time while they continue to improve on guidance.
Yeah,
That's the only thing that I'm worried about, that we just like sentiment just stays bad for years.
We've seen it before. We've had markets like that, just not in recent times.
No, exactly. And because it hasn't been recent, that people don't think it's going to happen again, but they happen. And I don't like, what I'm worried about is that there will be constant model improvements. And I just think people are just going to, constantly be worried about Claude Opus 4.8, 5, 5.5, 6, as they all, they get better at helping with accounting solutions. The new AI, like how much Morgan Stanley and Schwab ended up selling off on this altruist company coming out with this $60 AI accounting product that no one had even seen. It's just like the headline took like over $100 billion of market cap away from these two companies. It's like, it's insanity where we are right now in terms of sentiment. It's you're guilty until proven innocent, but that might happen for the next multiple years.
Yeah. Look, the biggest thing is for me, find great companies that are doing huge amount of profits that have forward growth. You should do okay if you're playing individual names. I rarely go with small companies. Zeta's one I'm going with only because I like what I'm seeing. I have no problem buying more Microsoft. I have no problem buying more Amazon. I have no problem buying more Nvidia.
Yeah.
I mean, the numbers support it.
Oh, I'm going to continue to it's not that I'm just going to be stacking cash, by the way, guys. I'm just going to buy companies that I think are more, that are not going to be hit by these types of stories. I don't think Amazon's going to get hurt. I don't think Meta is going to be hurt. Like they might in the short term, but I don't think long term they're going to be continued to get hurt. I think Salesforce and these sort of names could continue to get smashed.
They definitely could.
Just
Absolutely.
based on sentiment. They could continue to grow every quarter, but sentiment is just going to get worse. Like that, and I'm not I'm not predicting that. I'm just saying that could happen, and I don't need to take the risk.
Yeah, and the reality is Salesforce may never get back to 350. I don't know. I don't have a crystal ball. If I had a crystal ball, every single thing I say would come true. I don't. Salesforce could do very well. It may not. The numbers make it look inexpensive. But if the market does not have confidence in their future, then this is exactly what's going to happen. And we need some type of inflection point for this flush out to stop. Like, this is no longer people getting margin calls. This is no longer people selling into weakless. This is straight up the market does not believe that these companies can monetize assets in the future.
Steve, you're about to yawn.
Tanner just yawned. I didn't yawn.
It was me.
It was Tanner that yawned.
Yeah, because it's getting real close to my bedtime.
So why would you guys say, I hope Steve isn't getting paid by Zeta? Like, I've never taken $1 from anybody. I write about and I talk about what I want to talk about. Period.
Guys, the stock just fell from 24 to 16. It's an interest like that
Like
excites
the
long-term
numbers are
investors.
interesting. I said I was starting a position at 20. I said I would buy it up to 25 or I would buy it down to 15 because that's where I said I thought it could go. And Tanner's yawning again. He's trying
No,
not to show it. Yes, you are.
wasn't yawning.
And I had no idea what it was going to do. And my rationale is I can't pick tops. I can't pick bottoms. It's a company I want to be in, and I am fine dollar cost averaging it. I mean,
Steve
it is
can't
what it
be
is.
bought.
People say the same shit about Palantir too.
Yeah, people say the same thing about with Hood and SoFi and all this stuff, and I'm like, how could you possibly think that like SoFi or Hood or either one of them is paying me, but yet I'm talking so highly about both? How could that?
Or how about this? Think about how much shit I've talked about Palantir on the valuation, not the company, but the valuation. I mean, I'm very data driven. When the numbers support it, I will change my opinion on it. I'm actually coming back onto being bullish on Palantir.
Or the fact that it's illegal to say that it's not an advertise, like to say that you're not being paid if you are. Like,
yeah, you have to disclose that.
Yeah.
That's why I put a disclaimer in the beginning of every video.
So you are being paid. I mean, you walked right into that.
No, I didn't. That's why I put a disclaimer in every video because we have to say what we're doing. Like, I'm not being paid. Everything I say is my own opinion. That's in the freaking disclaimer.
You have to disclose that. That's why I put a disclaimer. Okay, let's wrap up. I need to have a sauna.
We mean sauna. It's not even 9:30 yet.
Yeah, I know, but this is whenever I have to disconnect.
Is this the Tanner witching hour?
Yeah, 9:30 is the Tanner gets off the camera. You know, I want to do a little shoulder exercise. I want to hang. I want to do some dead hangs.
I'm not laughing at you. Somebody said I should freaking steal Chris's freaking thing now that Chris can't use it anymore.
How does data-driven investing sound?
Oh, that's hilarious. All right, let's leave them with this. What are you rest of the week? You doing anything market-wise?
Well, Nebius is tomorrow, so I wanted to just quickly say that I'm not necessarily expecting that tomorrow, like we could have a big bump tomorrow. Like, I'm not calling for any market reaction is essentially what I'm trying to say. They could definitely end up selling off tomorrow because I think that they are trying to show, they're not sandbagging, okay? They're trying to show some pretty optimistic growth. And I think it was last quarter where they actually missed their numbers very slightly, and that actually ended up hurting the stock. But the growth that they still put up was 400% year-over-year growth on Nebius specific growth, 355% for Nebius Group. So while they might end up coming in shy on their numbers, I'm still looking for extremely high triple-digit growth rates. That's the important part. So the stock might take a hit, but overall, the growth is still there. Cool?
Yeah. I don't think I'm waiting for anything this week. I think I'm Nebius. I mean, I just don't own enough to really care as much about the earnings call. I'm really just waiting for NVIDIA and Zeta to report at this point. Broadcom. I think that's it. I need to look into what happened with Cisco. I haven't got a chance to read the report. I know it's down 8% after hours, so I got to look into what happened.
What's down 8%? Grab?
Cisco.
Oh, Cisco.
Yeah. I got to look into it. I don't know what happened. That's I'm so far behind. I have not written a single article about any of the Mag 7 companies reporting. I'm so far behind on my writing right now.
Well, you've just been loving YouTube so much.
I haven't even been streaming a lot in the past couple of weeks.
Humbug.
What are you talking about? I stream once a day, if that. This isn't November and December where I was burning vacation days to freaking stream.
Yeah, Tanner and Sam should do a joint stream. I don't know if Sam is doing a stream with me, but I know that there's going to be a ton of guys. Like, Manuel's going to be there. Neil, Tevis, myself. I don't know if Sam's a part of that or if he's doing his own thing. There's going to be a lot of guys there. Yeah.
All right.
It should be fun.
Good
Let's
luck,
wrap there.
everyone. Good luck tomorrow on Nebius.
Are we going to go back to doing our top 25 lists?
Yeah, I mean, we don't have time tonight, but we'll do it next week.
Yeah, UFC fighters.
So we have to do Trilogy Plus for movies, and then we have our.
I don't think I could do 25 of those.
No, well, we didn't say 25.
What are we doing? 10?
10, 15?
Okay.
So Trilogy Plus for next week for
top 25 Pokemon?
No, I can only name 2. Or 3.
Are you a collector?
That doesn't mean I have to know shit about it.
Yeah, but you own the card. Like, do you own them?
What? I've never watched it. I've never played the game. I could give a shit about the content. It makes money.
All right.
It makes money. So next week we will have our list for either top 10 or top 15 movie franchises. And to be considered a franchise, we are saying that you have to have 3 or more movies in the franchise.
Bless.
Love it. All right, everyone. Have a great night. Thank you for being here. If you're not following Tanner, please go follow him. Thank you, Michelle, Proud Gardener, Chels, Lena, everybody, Rambler. Thank you, everyone, for being here. Ray, really appreciate it. And we will see you next week. Have a great night.
Bye, guys.
Later.